Catherine Mott is the founder and CEO of Blue Tree Capital Group, an organization located in Wexford, PA, that provides the professional staff to facilitate and manage the Allied Angels organization. In 2003, Catherine Mott started Western Pennsylvania's first business model angel network, Blue Tree Allied Angels. Welcome, Ms. Mott.
Thank you, Chairman Altmeyer and Ranking Member Fallon, and all the members of the Council. I took the liberty to title my discussion today, Entrepreneurs Can Lead Us Out of the Crisis. Before I elaborate on the title, please allow me to explain my companies, Blue Tree Capital Group and Blue Tree Allied Angels. Blue Tree Capital Group was created as an entity to purposefully aggregate angel investors to invest in early-stage companies. We are a member of the Angel Capital Association, our professional support organization, whose testimony you'll hear from John May today. Because Blue Tree is located in Pittsburgh, PA, we are fortunate to be strengthened by 3 outstanding universities that serve as very fertile ground for multiple spin-out of ideas into companies. Please do not confuse us with Silicon Valley, Boston, or San Diego. We are a Midwest town with a very small but vital venture capital presence. The companies created in Pittsburgh are less likely to be funded by VCs or even by super rich angels like Mark Andreessen, who's the founder of Netscape. But instead, they are funded on the backs of hardworking professionals whose average annual salary is between $200,000 and $400,000. I tell you this because most angel investors look like us, not like Mark Andreessen, whose multiple millions lead people to think that they can invest in startups under any circumstance and in any economic climate. The average angel investor in the U.S. is at the lower end of the wealth spectrum and is not located in Silicon Valley or Boston. This is an important distinction for the committee. The current economic crisis has crippled the average angel investor's ability to invest because their net worth has dropped to a point where they no longer can place marginal capital at risk on startup companies. At Blue Tree Allied Angels, since September 2008, 2/3 of our 53 investors have ceased investing in early-stage companies. Why should this matter? Well, it matters because they fund companies that banks or other sources of capital will not or cannot fund. It matters because these investors are the mechanism that fills the funding gap between friends, family, and institutional financing. Without this mechanism, there would be no Alcoa today. It matters because entrepreneurs are the fertile soil for job growth and recovery. It matters because funding entrepreneurs can lead us out of the economic crisis. This recessionary crisis is more than a downturn caused by bad lending practices and Wall Street avarice. The greater underlying dynamic is at work, and it has been at work for some time. A fundamental change is taking place in the global marketplace. It's a rapidly changing, technology-driven global economy. The United States, the nation that brought the world electricity, the telephone, radio, TV, and the personal computer, could be losing the race for its own history. China, Germany, and India and other countries are aggressively encouraging and setting the stage for an economy that will flourish in this new technology-driven age. For example, contrast the U.S. capital gains tax rate to the 0%, 15% or 0% capital rate in Hong Kong, Singapore, and even Germany. The current U.S. economy and its tax policies are not built for this rapidly changing, technology-driven new world. In addition to fixing our U.S. debt and credit infrastructure, the U.S. needs a healthy equity capital infrastructure that can rapidly respond to the demands of a new age and the new competitive forces of the world. The real danger for the U.S. lies in merely fixing the old economy and ignoring the new economy. Only entrepreneurs have the flexibility, the freedom, and the risk-everything ambition to find the path back to prosperity, and it is the passion and commitment of angel investors funding these entrepreneurs that makes it possible. Yes, passion and commitment. About half of the angel investors provide more than money to entrepreneurs. They provide experience, guidance, business consulting, and contacts from their Rolodex. The passion and commitment also exist in tolerating investment loss. Like our venture capital friends, In an average angel investor portfolio of 18 companies, the angel investor will see 5 of these companies go bankrupt and only 1 or 2 will deliver an outstanding return. It might be better explained metaphorically. 5 will strike out, 10 will make it to first or second base and return a moderate amount of capital to investors, and 1 and maybe 2 will be a Hank Aaron home run. The hidden cost of this economic crisis is that angels have lost their wings. They are retracting as a result of the weak market and a stymied economy. I greatly appreciate the opportunity to speak with you today because as policymakers, you can make a difference by setting a tone with legislative initiatives that can help reverse the downward spiral of investing in business building and job growth. Regardless of where we fall on the political spectrum, all of us in this room have to agree that innovation and building businesses are imperative elements of American economic strength. There have been recent policy initiatives to restore our national communications and travel infrastructure, but that infrastructure has no value unless we restore the financial infrastructure for building sustainable companies. Nice new bridges don't mean a thing unless we are creating sustainable jobs whose tax base can pay for the nice new bridges. If capital does not start flowing soon to startups and early-stage businesses in this country, we will be faced with years of lost innovation. We will lose the good-paying jobs and a healthy tax base to other parts of the world that are aggressively facilitating innovation in startup companies. I will hope you will consider the following, or the 6 suggestions that are in my brief that I've submitted to you, and I appreciate this opportunity to speak. Thank you.